It is highly unlikely for you to profit from investing in a cryptocurrency unless you choose the right coin. Meanwhile, how to go 30 times your money after this Cardano drop? That's what I'm going to share with you in this video, and I know you don't want to miss a thing, so make sure to stay tuned until the end. Despite just dropping below $1, Cardano has maintained that level since March of 2022, making it important. The support that Cardano just broke is a very important support level. Also, I had no idea if a break below $1 would be in the cards, but it was very likely. Thus, on this episode, we'll explore whether or not we should abandon Cardano as the price continues to fall, or if we should continue picking up ADA at a greater rate than ever before in this video. With that being said, let's jump right into it. My first point to highlight is that Cardano's fundamentals are stronger than ever before. Further, we have also seen that Cardano has passed 3 million wallets and is becoming larger than Ethereum and Bitcoin in terms of daily transaction volume. So the fundamentals of the company have been phenomenal. And by the way, the transaction fees for all of those transactions are less than $100,000 a day. Meanwhile, Cardano is witnessing a huge amount of transactions. Also, a lot of major changes are coming to Cardano for this year, as we're going to discuss with Charles Hoskinson in the future. Despite how many other cryptocurrencies are rigorously tested, Cardano is the most rigorously tested blockchain in the whole industry, more so than Bitcoin and even more so than Ethereum. In addition to this, last August and September, Cardano started to rally when the ADA holders got very excited when the price went up to $3. However, a retracement of 75% has been observed in Cardano since the all-time high was reached. Also, many believe that Cardano is a dead project and its price is going down, so it became a stable coin because it was trading for $1 for the past 3 months. Here is the point. I want to emphasize a point very simply here, which is that we will not be doing a bunch of technical analysis here, as understanding what drives the price action of a cryptocurrency is quite straightforward. So fundamentals drive the price, nothing else. Furthermore, long-term price action is largely determined by fundamentals and not by technicals, so on-chain analysis is only a subset of fundamental analysis. Aside from this, the community is fundamental, development is fundamental, leadership is fundamental, vision, culture, market, and revenue generation models are fundamental elements of any business, as well as for cryptocurrencies. For a variety of reasons, Cardano possesses many of the strongest fundamentals in the entire cryptocurrency industry. Moreover, the Cardano blockchain is also the most rigorously tested and strongest blockchain within the entire cryptocurrency industry. So what's the significance of this? If it drops down to 87 cents, I do not consider that something to be concerned about, but rather as an opportunity, just as if Bitcoin dropped to $5,000 or $10,000 or $15,000. Also, because the fundamentals have continued to improve, I don't see that as being a problem. So the moment you see Cardano below $1, you should not freak out or fret about it. So instead of freaking out, what should you do? Do you have some ideas to share with us? Let us know your thoughts in the comments section below. And don't forget to like and share the video as well. In other words, now that the price has dropped to 87 cents, you should buy more. Further, you can get more ADA in this dip, and whenever you buy more, of course, you will have a better chance at making more money in the future. Aside from this, let's talk about the long-term picture of this coin. If it's going to go to $20, $30, $40, or $50 in the next decade due to its stunning fundamentals, it's going to be worth more than $1 trillion in market capitalization, as I fully expect. In the next decade, Bitcoin will be worth over $10 trillion in 2022 in US dollars, and I believe Cardano will be worth over $1 trillion in market capitalization. Meanwhile, Cardano has a current capitalization of $30 billion, which is nothing compared to $1 trillion. But this project will likely yield a 20 times, 30 times, or even 40 times return on investment. Will you say in 10 years that you should have bought Cardano at $1.03? Will you say that you should have bought it at 87 cents? And by that time, unfortunately, you will buy it at $1.03? Therefore, you will not get the perfect entry. So for me, when you're buying now during the dip, you're not going to say that. You're going to say that you bought Cardano around $1 and now you're up 30 times because you held on to a project with great fundamentals. This is what I'm thinking about doing, and I think it's something you should also think about doing. Cardano is dropping below $1 and is likely to stay there for a while. And just to clarify, it's not likely to drop below $1 and then rebound again. Until Bitcoin sees a resurgence in price action, it will likely remain below $1 for a while. And right now, it's a fun time in the crypto markets. Aside from this, for me, it is likely we will see that Cardano stays below $1. Also, here's what you can do if you want to maximize your profit. Do a recurring purchase every Friday. You can do the statistics yourself. You can do the price analysis on your own. Friday's the best day to do a recurring purchase. It's historically the cheapest price. Therefore, every Friday you should buy some ADA. You should buy some Bitcoin. You should buy some Ethereum. It is very important to invest dollar cost averaging on these dips if you can afford it, if you're willing to take risks, if you know what your time horizon is, and if you have money on the sidelines and you're not going to invest more than you're willing to lose. How come? You're lowering your entry price as you buy in lower and lower as price action drops. Let's say you buy 87 cents, 85 cents, then 83, at 90, 79, then 77 cents. By doing this, you could lower the average entry price and have an overall increase in profits as time goes on and as it increases to $2, $3, $4, $5, or even $10. To sum it up, I would encourage you to dollar cost average into crypto. However, I should clarify that I am not your financial advisor. I am not a financial advisor, and this is not financial advice I can give you. On the other hand, with Cardano's movement under the line for a month now, getting back up towards the $1 mark again, and as we approach the fourth week of March, ADA was trading at 0.905, having depreciated significantly over the past few months. Despite this, optimism remains high, especially since the altcoin accumulated a return of 12.87% on the third week of March. Furthermore, the price indicators have been displaying bullish signals along with the rally. With both the relative strength index and the MACD signaling bullishness, both are at their highest level since January. However, for every encouraging signal, there is always another confirming that a good thing will not happen. Additionally, in ADA's previous rally from the 28th of February, when the stock was up by 12.5%, the upward trend did not last for even a day. And immediately following its exhaustion, the alternatives price fell on the charts. There is therefore a legitimate worry that the same might happen again this time. However, investors' behavior is the one unique and unseen aspect of the rally. As a result of the hope of recovery, ADA holders have been extremely active on the third weekend of March as transaction volumes reached $55.43 billion. Moreover, 95% of this has been caused by whale movement, altogether accounting for $55.12 billion. Therefore, this implies that the 3.47 million ADA owners who account for 82% of all the addresses with 0 to 1,000 ADA collectively are only controlling 0.93% of all supply. By contrast, the whales, which represent 4.8% or 214,000 of all address data, account for almost 85% of supply movement. Additionally, the rally is not in response to investor speculation. Basically, this rally is being triggered by whales, which creates both certainty and uncertainty about hitting a dollar. Despite the general performance of the network is indicative of the former, with 400% increase in volatility over the last 24 hours indicates the latter. And one thing's for sure, though, that is when ADA does break through $1, it will run into trouble at its current resistance level of $1.02. Further, that level hasn't been tested for approximately 1 month now, but it formed a strong support level earlier in January. So maybe Cardano will get more attention from retail investors than whales if it closes above the key level. In the meantime, Cardano is trading at 87 cents per dollar and is down by 3.2% from its previous price with a market cap of $27.93 billion as we end the third weekend of March. Don't forget to enter the giveaway. Look in the comments section for what to do. Make sure you click the subscribe and bell buttons.